Hi all, this is Ashish Kyal here from Wave Strategy Advisors. Welcome to Elliott Wave News channel, an initiative taken by Wave Strategy Advisors in order to explain about the various technical indicators and also about Elliott Wave concepts and what is the technical state of equity markets. So our short term in the previous update, if you remember in the previous video update on 29th, we clearly mentioned that the fall which has happened on back of the event is probably not sustainable, and there were cluster of supports which were coming in place, and market should reverse from those levels. So after touching around the zone of 8555, we saw a very sharp reversal on the upside, and this was exactly in line with the expectation. And you can see the previous week's video update, which clearly defined why we expected a move back on the upside. And also one very important thing that we have observed over past so many years is that if the move is because of an event, it is probably not sustainable, and price will eventually come back to the level from where it started. So the previous move started from the level of around 8,800, and so the fall which happened came exactly on the support level, and then the prices rallied back towards 8,800 in the previous session in this week itself. And now again we are seeing some kind of a side or range bound action in this entire trend, which has started in late February 2016 from 6825. Majority of the moves that has happened has been sideways. The trending move has been only for around 4 or 5 times, and that too those trends have lasted only for around 5 to 6 days. So that made the entire trading environment very challenging. From investment perspective, stock specific action has continued during this entire period, and people who have been hanging up on the stocks that has been an outperformers were able to make decent returns. But if you are within the community of trading, or in trading over or swing trading, I would say making money, and especially on options, is probably not very easy, given the fact that markets have been trending only for a short period of time, and then what we see is a sideways consolidation. Let me share across my screen showing the charts which we discussed even in the previous update about the channels, and that will give much more insightful analysis on how do we trade such kind of moves. And we will be discussing about Bollinger Bands very quickly. And the reason for such applying Bollinger Bands is because during the sideways market, this technique works very well. So the screen that you are seeing right now is of the Nifty chart, and shows the entire move from 6825 levels, and is currently price are currently trading somewhere around in the zone of 8,700 to 8,600. So let me just again brush upon the channel support concept which we discussed last week. As per this concept, you can see the blue trend line support levels, and the fall which happened on 29th was exactly at the lows of that channel, from where we saw the reversal, and that was one reason why we were expecting that price should reverse back. Another channel that you can see is the lower dotted trend line, red one, and the third channel which was intact was the if you connect the lower highs and the lower lows, you get exactly at the same point, and the juncture where the couple of trend lines meet together are the ones which are very very important, and that is why this place we expected a reversal. Now what has happened is when we have applied an additional indicator today known as Bollinger Bands. Bollinger Bands work on the concept of two standard deviation away from the mean. For example, if you have a moving average on this chart, and you plot a two standard deviation on the upside and two standard deviation on the downside, then you get a band which is known as Bollinger Bands. And these bands works very well during a sideways market, and it helps us to understand what are the key support areas and what are the key resistance areas. And especially this works excellent when the bands have themselves turned on the sideways. So over here, if you check the chart from around July onward, July 2016 onwards, the majority of the trend has been in a range. Prices have been fluctuating around 8,800 and 8,600 for 8,550 or 600 for many many weeks now. There was only a temporary break on the upside, and with equal speed price re-entered within the red channel on the downside. So within this zone, when there is no trending move happening, Bollinger Bands tend to provide the support areas from where you can probably create long positions, and the resistance areas where probably you should look out for squaring of your long positions, or probably squaring of the long positions, or probably creating short positions. So as per this technique, when we were at the lows of around 85, 8555 or 8600 levels, at that time band was absolutely flat, which means for a decisive break, we need a close below the band by the next bar. So over here, what happened? The black bar managed to move below the band, but the next bar did not close below the low of the prior bar. And in the entire up move, if you check, not a single time the band and there was any follow-up close below the Bollinger Band's low. So that clearly indicates that for a downtrend to emerge, the day we start seeing a move back below the low of the Bollinger Band, and the next day takes out the low, that will strongly confirm that the trend has reversed on the downside. On the other hand, any move which happens towards the upper end of the Bollinger, which is at this zone, and we see a negative bar formation from this zone, that will indicate that probably again we are reversing towards the downside. As of now, prices are exactly in middle of the band, so it is like everyone's guess whether it's going to go towards the resistance side or it's again going to retest the support. So for now, the trading strategy should be that one should wait for a confirmation of prices, and at the same time probably evaluate the chart on an hourly scale in order to find out an early entry or exit level. So over here we are showing a daily Bollinger Bands on the daily chart of Nifty, and the same can be plotted on an hourly chart in order to identify a very important reversal areas. So for now, there is a possibility that we might again move higher towards this zone, and once that is done, then the selling pressure can again start intensifying, and price can again move back towards the lower end of the Bollinger. So any move towards this upper end of the Bollinger will provide an opportunity to enter shorts, keeping a very strict stop loss because we are against the medium term trend, which is still on the upside. And the day we see a very strong move below the level of lower Bollinger Band and a close of next bar taking out the low, will strongly confirm this entire uptrend is complete. And we will then come out with the downside projections. I hope this explains the concept of basic, very simple concept of Bollinger Bands and how it can be used and combined along with channels. So what we will do is we will keep incorporating one and the other indicators in every weekly meet that we have at around Friday 4 p.m. And this will help to take an informed decision by traders or analysts, and it also helps in increasing accuracy. Now, Bollinger Bands might not work very well during the case when prices are moving in a trending fashion. So you need to be cautious and apply it only during a sideways action. And as soon as the trending move starts, you need to start applying the different trend following systems. So for now, I'm going to stick with these bands as long as it is working. And I'm going to be very careful now because I think the trend is now maturing on the upside. And that we gauge based on using Elliott wave. So Elliott wave helps us to understand how mature the trend is. And there is a high possibility we are at a very important juncture. And also time cycles which we apply clearly indicates that prices have been moving in a very mature stage for now. So we have been bullish near the lows of 8,600. We have been bearish when Nifty was around 8,960. And now we are again waiting for a good trading opportunity, which we will mention very clearly in our daily research report, the Financial Waves short-term update. So stay tuned. In case you would like to get access to that research report, please feel free to visit wavestrategy.com. On the pricing page, you will get all the details. And also, we are conducting a training on 20th and 21st of October in similar fashion, where I'll be talking about Elliott waves, how these basic technical analysis can be combined with Elliott waves, and also how time cycles can be used in order to come out with a very high probable trade setups. In case you would like to register for that event on 20th and 21st of October, it's via webinar online. So please feel free to again write to us at helpdesk@wavestrategy.com or call us on 99204 22202. Also, if you have any queries on any specific technical indicators you would like me to cover, I'll be more than happy to do that. Please drop me a mail directly at ashishkyal@wavestrategy.com and I'll be more than happy to assist. That's it from my side now, and hope to see you again next week, same time, 4 p.m. Friday. And in case you missed the video, it will be available at 5 p.m. on our website. Thank you.